Pariba. He's the IT and auto analyst there to try and, of course, talk to us about what he's seeing with regard to auto. Good morning, Kumar. It's great having you on a day like this. Just to kind of take a step back, set the context. You've obviously got a large AI disruption, which is not only playing out in Indian markets, it's also playing out in the global marketplace. But talk to us about what this does fundamentally to the business models of our traditional IT companies. In your opinion, and we've taken opinions from various experts on this, in your opinion, does the business model come under strain, if at all, AI comes or becomes more mainstream, in your opinion? Give us a sense.
Hi, good morning, and thank you for having me.
Very good.
So we see AI getting implemented in enterprises in potentially two phases or two parts of the enterprise. The first is the business processes. Wherever things can get automated, they will get automated. This part of the work was already being incrementally getting automated. We used to see the work being done by RPAs where 10 to 15% productivity benefit was already being achieved. What now we are seeing is all of those kind of productivity benefits are being accelerated through the use of agentic AI models. So that these are largely the traditional processes where there is a set framework, set flowchart of operation that has to be done, which an agentic model can be trained upon. And then the need for workforce is significantly less. And that starts getting automated using AI tools. So that's the first part, which is the business processes getting automated. And as you can imagine, this would be more deflationary in nature because this is largely for cost saving, reducing the work intensity, which was earlier. And this is disruptive in a negative way. The second part to this is the business transformation. Now the enterprise data is sitting and trained all the large language models, and using that, some of the new applications can be built, maybe hyper customization for their customers. And that is something which we believe will start creating new use cases, more businesses for IT services companies. And that will be inflationary in nature and disruptive in a positive way. Now, unfortunately, the business process disruption is more front-loaded. We are already seeing the impact of that over the last 1.5 years. Some of it has already started showing up. But the business transformation, inflationary new work will take longer because these models have to evolve a little more. Enterprises have to get more comfortable to use them and integrate them into their end businesses. And that takes a little longer journey. And potentially at some stage, we would start seeing the benefit of the AI implementation as well for IT services companies. Overall, we would believe that it would be neutral, but the impact will not be linear. First, there will be a deflationary pressure followed by inflationary pressure. Again, not every IT services company would be impacted equally. It depends on what they are more focused on, which part of the service line they are more focused on, because the impact will not be linear and symmetric across all the parts of the services businesses. And that's how we would expect this to pan out in the coming years.
Okay. Kumar, hi, morning. Thanks for that take. On that note, do you believe that the reaction that some of these Indian IT companies, at least on the stock prices, are seeing is largely over-exaggerated, or is it overdone at the moment? Because we also have a statement from NASSCOM a few days ago wherein they believe that these concerns about what artificial intelligence can do to Indian IT services is misplaced. And if anything, this is only going to augment Indian IT operations going ahead. How much do you agree, disagree with this statement? And what are you making of the reaction that the street is giving to some of these IT stocks?
So we'll have to first understand what exactly investors are looking at or sending a message in terms of these sharp stock price reaction. What they essentially are looking at, and when we are speaking with most of the foreign institutional investors, they are incrementally getting concerned on what would be the terminal growth of these companies, what would be the long-term sustainable growth for these business models. Now, the challenge which they also are facing, investors, is that we do not have a clear answer for this as yet, that how actually this disruption plays out and who gets impacted what. And with that high level of uncertainty, at a time when the technology is evolving at a very fast pace, they are choosing to sit on the sidelines. They're trimming their position in this sector to sit on the sidelines to first better understand that how this exactly plays out. And then once they have better understanding, maybe come back and then start building position again in specific names who are the net beneficiary of this trend. Now, what we have seen, especially over the last week, 10 days, couple of weeks, is, I would call something very similar we saw last year. If you recall, last year, any company which used to come out and announce their significant capital expenditure for data center building, the stock used to react very positively to that. And then came a time when stocks stopped reacting to it. And now we are in a phase when any new expansion in capex is seen negatively, and stocks have started reacting quite sharply on the negative side to it. What I'm trying to say is that there is a cycle of fear and greed which plays out. And right now we are at an elevated level of fear. Any new frontier model getting launched or new version coming out is seen significantly as a negative to the sector, not just services, but software as well. And we think that this is a cycle which will also peak at some stage. We would get to a point where any new model launches by these frontier models will not have any stock price reaction. We think that's a good trigger to watch out for, and that will potentially start indicating this fear among investors has largely peaked, and that could be a good entry point in the sector.
So Kumar, your favorites within this space, how would you best play it? Because now we're starting to see prices correct to maybe 5 or 6 year lows, where the IT sector is concerned. Clearly, you seem to be suggesting that there's an opportunity coming up. At what level do you see that opportunity, and what are your top picks?
So our top pick in the sector among the large caps is Infosys and Tech Mahindra. Infosys we see as one of the key beneficiaries of AI implementation because of the capabilities that they are building. We also see Tech Mahindra significantly transforming their business, both in terms of revenue growth and margin, and that should imply that they should grow faster than the overall industry. So these two are our preferred pick among the large caps. We like Persistent Systems among the mid caps. We think Persistent Systems is the key beneficiary of AI implementation. It's already showing up in the revenue performance, which is starting to decouple from employee growth. So we are already seeing some initial signs of that performance.
Okay, Kumar, so that's your pecking order and the preference list from the IT space. On that note, we'll let you go. Thanks so much once again for taking the time out and speaking to us this morning.